Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna.
Welcome back to the Payment Shed podcast. Today we are joined by Will Plummer, CEO of Trust My Group. Will, thanks for coming in. Tell us a little bit more about you.
Well, thanks for having me. Great to be here. So, CEO of Trust My Group. And the group's split into two main companies. So on one side, we've got TMU Management. So that's an insurance MGA providing credit risk insurance to the travel industry, financial institutions, and FX houses. And then on the other side, we've got Repaid. It was formerly Trust My Travel, which is a merchant of record solution for travel companies, basically.
Amazing. I like the merchant of record piece. Gets you excited when we talk about payments. What originally kind of pulled you into solving problems in the payments world from a travel perspective?
Good question. I think I'm a problem solver at heart. I like to tinker with different things, and that's probably been my undoing at times, but was in travel before, selling outbound travel, selling inbound travel to Oman. Actually, I used to run a DMC in Oman. And it was looking at some of the challenges around that. So we're going back 2006, 2007. It was really easy to build your own website. E-commerce was in its infancy, but also things like financial protection were also in their infancy as they met e-commerce. And it was, what could we actually do to marry that? So we originally started with a trust account solution. And then it was, how do you get money into the trust account? Bank transfers, obviously, initially, but then payments, credit card payments came in, and here we are today, built up into a fully fledged sort of payments company.
And when, I guess, did the merchant of record model first click for you guys as this is the route we need to be going down? Were there pain points that did you start in a different place and you're like, we can't keep going like this, we need to look at a different way of doing things?
I think merchant of record on the whole is a pain point, and I wouldn't say we've necessarily gone, we've solved it and we're happy. You know, we take legal advice every year to check we meet the regulations, that we're doing the right things by our customers and by the market. So yeah, it's probably still up in the air, but it was certainly early on, how do we get money from A to B? We do a lot of business outside of the UK, outside of Europe. So there are varying challenges around that where a PayFac wouldn't actually fit that model. But what we've done with that merchant of record is we are actually providing a service to the customer. So we're providing financial protection to the consumer. So we onboard the travel company, and then we are taking that consumer's money and protecting it, either with the funds sat in a trust account until after travel, or we're insuring them against the merchant's insolvency.
And do you take on a level of risk by being the MOR then as well? And you're
of course
with travel, that's
where
my mind goes.
Absolutely. I mean, that's what goes hand in hand with being an MOR, is you are taking on that risk, and you've got to acknowledge that. You've got to acknowledge that with the acquirers, with the schemes, because any failures, they're coming to you. So for us, that's a lot of due diligence when we're onboarding, but also where the model's been built up is with that security in place. So we have this insurance that protects everyone through the value chain on that, which includes back to the acquirers. So they're actually getting a level of comfort from us, a high level of comfort, because they're endorsed within an insurance policy which protects them in the event of merchant failure and then ensuing chargebacks.
And just picking up on a small thing, then you said acquirers plural. So you have multiple acquirer relationships.
Yeah, I think that's crucial.
Especially in travel, right?
Especially in travel. We also work multi-geography. So we're looking at where we can process closer to where the consumer is. We're less concerned with where the travel provider is located. But also, I'm not sure burnt is the right word, but we've explored a lot of things where we've gone down a single acquirer relationship. COVID was, a real exponent of that. And I would encourage anybody in a space like travel, to your point, Justin, to look at a multi-acquirer strategy. I think that's prudent. Appetites change, whether they're going for an IPO or a fundraising, but also how the market looks at travel I think you've got to have that protection, whether you're us or whether you're a travel company just getting a acquire a relationship yourself.
Look at COVID, right? Or I talk about COVID, but actually, the example I always get from credit risk teams when I was selling to travel and airlines is no one expected the cloud ash in 2000 and whenever it was, right? And all of a sudden the world's ending and people losing millions. And I remember I tried to win a huge travel business once, I can't say names. And I remember sitting in a meeting room with our credit risk team saying, like, they're never going to fail. Look at the size of Thomas Cook.
Too big to fail,
they're too big to fail. And then the day it happened, all I got was a one sentence email from my head of risk saying, I told you, and it was a link to the Thomas Cook collapse. So I think it's a really good point there around, we always go to credit risk and say, yeah, there's a risk, but these guys would never fail. They've got this behind them, they've got that behind them, but you just don't know what's going on sometimes.
Yeah, it's true.
What do you think then are the biggest misconceptions from a merchant of record to a payback?
What they're doing and the role they're sort of playing within an ecosystem. You know, a payment facilitator is obviously regulated and sort of heavily regulated and controlled in that they take a limit of risk, but ultimately that's still sitting largely on the merchant. With us, we're taking, again, to Grant's point, we're taking all the risk.
Yeah.
So it's for us to justify that to the acquirers, again, to the schemes, but also give that level of comfort to the market, both to the travel providers that trust us, but to their consumers who suddenly, you know, they get a receipt from us. That's our duty as merchant of record. So really making sure that they understand why they've paid us, why the money's come to us, and what we're doing for them.
It's such a fascinating space. I think every acquirer looks at the merchant of record part of the ecosystem with slightly different eyes as well.
Yep.
Some see MOR as a payback almost, and that it shouldn't exist. Whereas others that dive deeper into the finer terms and conditions, the contracts between, I think that's maybe what it is. There's an element of, I maybe say laziness, maybe that's not the right word, but do they have to review with a fine tooth comb your contract with the customer's contract with their customer, right?
Yep.
It's like, it just seems like hard work. We can just say they're a payback. Actually, no, you're not the payback, and there is a very real reason why merchant record and payback are two different things. But I think we've maybe got a little bit lazy in the industry around having them very much in defined buckets.
I think we can blame salespeople on that a little bit, right? Because you've got salespeople that are trying to win a bigger contract value.
Yep.
They will do what they want and what they can to manipulate a conversation to try and win a bigger deal.
Agreed, yeah. I think as well, back to all that point, you speak to a lot of acquirers and they use what I call the dirty A word, which is aggregator, and they see merchant of records as an aggregator. And there are a lot of cases of that. There's a lot of history of that. But certainly we go out of our way to say, no, we are actually delivering value and a product within this transaction. We're providing that financial protection. And that's an important distinction. And that, for the acquirers to understand, they see the value. You know, we have acquirers that will actually refer us business because of the value add that we're giving, and also offsetting that risk. Again, you know, what can you do to balance that sales with your risk team to make sure that it goes through and you as a bank can actually process that payment?
I love that narrative. So acquirers are like understanding the hard work you've done to enable them to be de-risked from a travel company point of view, and then they're sending you their travel business.
And that's a big thing. You know, it's understanding that risk. And I would suggest that a lot of acquirers that are in travel, and for a lot, I think you'd agree, travel is a golden ticket because they can sometimes charge higher premiums on that, albeit it comes with an offset at scheme level. It's really, a lot of them do not have an understanding of the risk they're taking on. They say they've got level 3 data. They say they've got an analysis and understanding the risk. I say a naughty word, but let's just say no, they haven't.
Nice. And kind of, what do you think was kind of your purpose and motivation, and how did that evolve as the company has grown into what it is today?
In terms of my personal motivation, it's a really interesting and nice kind of juxtaposition between different industries. Love travel, love traveling, love that industry. It's a really fun and interesting industry to be in. And then you throw in payments, which has different complexities and different viewpoints on things. We've also, post-COVID, obviously got into the insurance industry as well. And altogether, there's a huge crossover, but a really interesting diversification. And we quite like the fact that we can dip our toes in and out and meet all of them.
And I guess the biggest challenge that you faced early days when going down the merchant rep, sorry, harp on about merchant rep, but
That's
what,
all
what
right.
was the biggest challenge that you faced when you initiated going into that model?
It goes back to kind of what we were saying, you know, it's getting you've got to break the ice somewhere. So it's getting an acquirer to really understand what you're doing, and you need someone to go first. And when we started, that was 2012. You know, it's a very different space than we are now. Aggregator was a word that was bandied around a lot.
Did you go straight into that model as well then, or did you have to go on a no, so you were
Yeah,
literally this is how we want to do it from the
straight
beginning?
MOR. We explored, in fact, when it was still the FSA, you know, we were originally registered with them in terms of not as a pay fact, but what we could do as a payments business and how that sat. But again, taking a lot of legal advice, understanding how the model sat, we realized that actually that was hampering what we were doing, and we needed to take that away, mainly because of the relations we had with outbound payment companies. You know, they don't like dealing with two registered or regulated entities. So that was a challenge. But on the MOR, yeah, it kind of, I don't want to say that was the easiest route. That was the easiest route conceptually in terms of what we were trying to achieve. But actually it probably came with more challenges, and the way we onboard, the way we DD and do KYB on our customers is probably at the same level or harsher than a sort of payback onboarding, because you know, to your earlier point, it's our risk, we've got to take it on. We also have to demonstrate, and we're willing to demonstrate to all our acquirers, you know, why we've onboarded, where the risk sits, etc. But yeah, so it was, I'm not sure early on we necessarily considered another route. We have since, obviously, and we've explored that. But merchant of record, and I think the more we do it and the longer this has been going and the greater understanding there is within the payment space, the more opportunity there is, but also what a great pathway it can be.
You probably get that, you know, acquirer sort of 5 years ago wouldn't speak to you, that's now coming back a little bit with their tail between their legs going, oh guys, you've got the volume now, and you've got the process now. Can we have your volume,
please? Yeah, exactly. Yeah.
No, I think that when I was selling into that space, each year it would kind of change appetite, where I'd have a merchant come to me, I'd put to my risk team, they'd say no, then next year they'd say yes. On the flip side, I would lose a deal to another acquirer and then have the same contact reach out to me saying, we've been capped at 5 million a month.
Yeah.
Can we look to move a couple of a million a month into your processing platform? And there's quite a few, especially in the OTA world now, that have got 5 or 6 acquirers.
Yep.
And there's a lot more travel business now using orchestration platforms. I booked a holiday yesterday.
Another one.
I know. And as I went to book it, SellPoint Digital came up, because they are just doing more and more in that space now. And when it comes to orchestration platforms, winning more travel businesses from a gateway, and then looking at the acquiring side.
Yeah, I think that's everywhere. And again, we've made the point. I think travel needs that resilience of a multi-acquirer strategy. I think it works for the merchant as well. You know, you're spreading risk, but you're also able to push back on pricing, and it's demonstrating what you're doing and how you're doing it. And I think you've got to employ that strategy. An acquirer can say, "Oh no, you're with us for life," but every acquirer I've ever worked with, you know, their appetite does change. You know, it doesn't take much. It takes an ash cloud. It takes COVID to really know where things sit. You know, even during COVID, some people were really willing to work with us and understood what we were doing and how we were protecting them. Others ran for the hills.
Is there a risk, do you think, that maybe some of the acquirers are underestimating when it comes to credit risk?
I think that is the case not just amongst acquirers, but we see it in the insurance world and the bond space within the travel industry. People are underestimating the risk to win the business, especially in some of the tier 2 acquirers, where, you know, they want to get into the travel space. They want that kudos and that opportunity to win that business. And there's huge volumes out there to the right player. But for us, and I preach about this a lot, it does come down to understanding the risk and mitigating the risk. And I said to you when we were exchanging messages before, it all comes down to this data and understanding exactly what's going on. And whenever I talk, that will be the key word. I think if people are playing bingo along to this, data is kind of the crucial part of all of this. And I think wherever you sit, whether you're the merchant, whether you're the acquirer, if you've got that data and if you can understand that data, you can put yourself in such a strong position to achieve whatever you want in the payments world, whether you're in travel, which is considered high risk, or not.
And where do you think that the acquirers are overreacting and underreacting the most as far as the travel sector is concerned?
I think it depends who you are as an acquirer, where you sit, what you've taken on in your portfolio, and also, again, your understanding of exactly what is going on in your portfolio. We know of some acquirers that have got very profitable merchants that are disgusting risk, but they make them sizable amounts of money, so they don't want to move them off that books. But I think
these are merchants you wouldn't touch with a barge pole on your own MOR setup, right?
No, I would not.
Okay.
I'd also say every single acquirer out there has high risk merchants where the margins are so big that they're willing to take that risk and that rough from the schemes. Agreed.
But then you've got to, as a merchant, you've got to play that forward. Are they the acquirers that then have a knee-jerk reaction and there's an ash cloud? It's just like, oh, let's get everything out of travel. Oh, I'm having an IPO. Let's get out of travel as fast as we can. Or are you actually building a really healthy, consolidated book where you understand what's going on? Yeah, you've got some high value, high risk merchants, but they're nicely offset by, some cleaner, maybe lower value ones. And just going back to the insurance world, it's that balance of risk, which I think from an acquirer, you have to sort of take that viewpoint if you want to move forwards. Even the big acquirers who are, when they talk about travel, it's largely aviation based. Mm-hmm. They can say, well, they're state-backed airlines and there's no risk whatsoever. But, if they fall, they will fall hard. But, that becomes a judgment, doesn't it?
It's like the regional airlines in the UK that go bust every 6 months and someone else goes and buys it again. You all know the one we're talking about recently.
I think I've won 4 of them before.
And every 6 months they go bust. Like these little propeller planes. I mean, how many people need to fly from Exeter to Newcastle on a given week? Like that's the question I'm asking in all this.
I can't comment on that. You have to get someone from Exeter on that. But it's like Chapter 11 in the US, isn't it? It's that kind of model and that kind of risk. And I think you've got to analyse and understand that. And I think, again, that comes down to understanding the cash flow of these businesses. And as an acquirer, or merchant of record, how are you protecting that cash flow? We will analyse a customer, and most customers have their money as they would get with a normal acquire relationship. So they process a payment, they'll get paid out a week later, half a week later, whatever it may be. But others, startups, higher risk, we won't pay out until after travel. We won't pay out until wheels up. But it's understanding that risk, and it's also having that flexibility around that risk. COVID, I'm not afraid to say that we put brakes on a lot of things and we just stopped payout. And that was the right decision because subsequently a lot of refunds went out the door.
Mm-hmm. Can you look at an example then? You don't have to name a company, but was there an example where a merchant on paper looked very high risk, but using your data and the way your products work, you were like, actually, these guys aren't high risk at all, but you're just not looking at them the right way, or maybe the direct acquirers they were speaking to weren't looking at them the right way?
Yeah, I mean, great question. I'd say that's what we do. I don't want to say that's what we do for everybody, but absolutely, I would say we are very good at converting high risk or what is perceived as high risk merchants to lower risk merchants to the acquirer, because we're doing a number of things. We're controlling that payout flow, so we know where the cash is going. And also holding back cash doesn't necessarily mean that that's helping the merchant. There are other scenarios where there's a holdback of cash, and that's actually impacting the business's ability to trade. And then you're going, well, that's a vicious circle.
Chicken and egg,
So,
isn't it?
yeah, so you've got to understand what's going on there. You know, a lot of scenarios where in a tour operator or OTA space, you can actually, through a trust account, we call them control accounts, but you can control the payments going to the suppliers within a booking. So you've got full visibility and a full audit trail of all of that happening. The supplier's getting paid, so they're happy. You're mitigating risk. We actually ensure that whole value chain as well. That's part of what we do. But again, it does come back to this visibility. It does come back to this data and being able to say, look, this is the lead-in time. This is what's at risk. This is how we've adjusted that risk for you. But this is also how we've supported that business not go out of business because they've got no cash. And every scenario is different. I mean, you guys know as well as I do, travel is a huge amount of verticals, was a huge amount of varying risks. And aviation is different from accommodation, is different from tour operators. And even within those, there are different makeups of each of those in terms of what they do and the markets they serve.
If you could rewrite the rule book for travel underwriting teams, what would you kind of change on it first?
I would dictate a certain level of data and information that needs to be provided. And I think probably at a scheme level, I would also dictate that the acquirers, if they want to get into travel, and maybe you have to incentivize it, it's carrot and stick, because a lot of them have to put down huge collateral to offset their risk in travel. But I'd actually say, look, this is a data standard that we expect you to have as an acquirer. And you start from that point and you have a real understanding. Because you talk to acquirers and you say, do you collect level 3 data? And they say, yeah, we do. It's okay. Can you provide it to us? Well, we know that the average lead-in time is 6 months for that particular merchant. How? Well, because they told us.
Yeah.
Okay. That's kind of, finger in the air stuff. And I think for something like that, any kind of delayed delivery merchant, that visibility is crucial. And we're in 2025. We've got AI that can break up, that mass amounts of data. And that has to then be the next step forwards, I would have thought.
Yeah.
I was going to ask you about AI because, data is clearly not a buzzword for you guys. It's really a central part of your model. Yeah. Are you starting to pull AI into your stack then?
A little bit. And, I think I got carried away because how do you shoehorn AI into your business come what may? And the best piece of advice I was given is only use AI if you've got a reason to use it. So we have just built it into our new platform on both sides. And for us, it's really about being able to analyze vast amounts of data. That's as far as we've gone at the moment. And that's twofold. So internally being able to, we've always had these kind of alerts. So with each merchant, we would say, where are we expecting the customers to come from? Where are they traveling to? What's the average kind of lead-in time? And then alerts if any of those change, so we can investigate, we can look at what's going on. But also on the front end, when we're giving data to our travel providers, our platform, our dashboard was very much, this is what we think you want to see. This is the split of data we think you want to see. But we realized we've got all this data, let them decide if they want to see the amount of bookings they've had from the Cook Islands, or what the split of Visa, MasterCard during this period was, or that kind of thing. So that's where we've dipped our toe in with AI, and we'll see moving forwards.
And what's the single most important data track for you as a business? Do you have one particular thing, or is it multiples?
No, not really a single data track. It's a variant on what we set on a per merchant basis. So configuring that merchant day one in terms of expected numbers, expected lead-in times, expected destination, etc. Having the awareness when those things change, and then having an understanding as to why they change. It's okay that they change. Businesses change, business opportunities come. But, we saw in the early stages of COVID, safari operators whose average lead-in time was 6 months suddenly go to 2 weeks. When I see people selling out to 2028, 2029, I'm like, okay,
Makes you nervous.
you can't book flights at the moment, if you're a tour operator, that's too far out. So that seems like a run for cash in a lot of businesses. So it's really understanding the changes in what's been modeled. And then what we'll do is we audit based on risk. Everyone gets at least an annual audit, but it may be earlier, it may be more regular. If we consider high risk, we'll actually adjust those to what we've seen. So we set a new kind of a bar and a standard line for each one.
Today's episode is sponsored by ISX Financial. Most growing businesses end up stitching together multiple providers to run their payments and banking, leaving them exposed to cash flow, reconciliation, and even security issues. ISX Financial delivers a unified ecosystem with multi-currency accounts, online payments, real-time UK and EU transfers, and global mass payouts. Within that platform, Paid By provides pay by bank with real-time settlement notifications, automated reconciliation, and integrated refund management. One partner, one integration, helping your business transact with confidence. You can learn more at isx.financial. That's isx.financial. And a big thank you to the team at ISX for supporting the show.
How do you kind of separate the meaningful signals from noise when analysing the cancellations?
A lot of that comes down to understanding the business. So understanding who you're dealing with, seeing what's actually happening, seeing what the customer behavior is as well. Does that increase chargeback rates? We have, because we're merchant of record, we've obviously got all of the customer details. So we can reach out, we can get on top of things. If there is a run to chargebacks or if there is fear of certain things, we can get on top of things like that. It's also having that close relationship with the travel provider. Why have you started selling 2028? Why are you now selling a new destination? Did you know you've now got more people booking from this region and you were always that region? And understanding from them what's going on. The other nice thing about a merchant of record model, and especially how we sit it with the control accounts, the trust accounts, is we're holding the money. And that's not holding people to ransom, but that is basically saying we need to understand, because we're the ones at risk if things go wrong. Yeah. And we have a responsibility to your customers if things go wrong. So give us the data and we'll very happily give you your money.
What's one sort of surprise you've had from all of your data sets? Is there a particular thing from all of the data that you get that you've been like, I didn't expect to see that?
I think it's probably how non-standard, is that even a word? Non-standard, irregular, the data can be within similar businesses and how they're approaching the market so differently. And I think that's such a common misconception in the travel underwriting space, is actually, we've got an airline, so they must behave like that. We've got a tour operator, so they must behave like that. They don't. Even if they're selling identical products, their operations tend to be very different. How they do things tend to be very different. Are they paying their suppliers by virtual card? Is that traceable? What kind of credit terms do they have with their suppliers? How are they marketing? What payment types are they accepting? It's so variable, and that's what makes it interesting.
I remember reading some stats years ago where it was mentioning around when people book through a travel agent face-to-face, the lead time's a lot longer than if someone was to do it online.
Yep.
So that then has a huge knock-on impact as to who the payment provider is. If you're taking their in-store payments for their travel compared to someone's booking online, because you might book for a flight in 2 weeks' time, but very rarely would I go into, I don't know, Tom's TUI and say, hey, I want to go on holiday in 2 weeks.
Yeah.
So the payment providers of them different channels of payments then has to take that into consideration as well.
Yeah, and it's really interesting the way that's kind of changed, and COVID changed that. You'd probably say 2019 travel agents were going to die. There was no need. Everyone was shifting to online OTAs. COVID, I think people wanted that reassurance.
The security. Yeah.
There's now talk of AI taking that back, but I think there'll be a full revolution where people will still want that reassurance of making sure that person's I've actually seen that hotel. I actually know what that's like.
I think people like experiences now. It's like, why are records? Why have they had their big renaissance, right?
Yeah.
Like, there was something nice about going with your mum and dad down to the travel shop, especially for younger kids. Like, you go and pick 8 magazines off they used to have the shelves in the back,
They were amazing,
right?
weren't they? Yeah.
And you could sit there and you felt like, I mean, this is why I guess travel counsellors and companies like that still exist, right? Because they give that personal service. It was a miniature version of that travel counsellors. You felt like Dave or Cindy or whoever was serving you and helping you book your holiday was really invested in you, and understood your needs inside out. And you obviously don't get that from a computer experience. So that personal thing it's happening in loads of different sectors and spaces, but people are kind of pushing back, I think, a little bit around it. Maybe in this from a COVID thing, everyone went inside and it's like, no, I want to go out now and I want to talk to people and I actually want to have that interactive experience. So yeah, it's an interesting.
I want somewhere warm with 2 bedrooms, somewhere nice for the kids, somewhere in Spain, and then you go in somewhere and like I said, they then go, these are the options we've got.
That's an example. We've got young kids, both of us, and the last holiday I had before we had our second, just with our toddler, we went with the all-inclusive holiday, and
sensible play.
Yeah, it is. But like because with the naps and stuff, like we needed somewhere with a nice balcony because we knew from 8 o'clock at night we were going to be stuck in our room. So we ended up playing lots of card games and God knows what else on the balcony to try and entertain ourselves, have enough wine for the evening without having to leave the hotel room. But what I really wanted was, like a villa within a hotel resort where the kids are asleep and we've had more outside space and you didn't feel like you were just parked in your room and stuck on your balcony for the evening and you couldn't go and enjoy the music that was going on further away in turns or whatever it might be. That's quite a niche need that we had, and it was very hard to find a hotel that had the specific setup that we were looking for online.
But do you think that's a generational thing as well? Because I think the younger generation would probably argue, well, you could have put the right questions into AI and got the answer. But I think there's the reassurance in actually dealing with someone that can go, yeah, I know that, and everything else. That's my fear with AI. But this is a payments podcast, I know, but my fear with AI is actually that the younger generation kind of trust the answer that they get out of AI and nothing else. At least with Google, your search engine, you actually have to make a decision yourself.
Agentic will come into this, and obviously Agentic is going to influence your world significantly because people will be using it to book their holidays in that way, right? So that's something you, as a travel platform, need to prepare for, right? Potentially.
I'm grinning because absolutely, it's the buzz at the moment that Agentic is going to take over, and it will certainly have its place. The one thing I'm concerned about is we can't even get payments right and risk right and chargebacks right in a non-agentic place with manual intervention where the cardholders actually put the card details in. And now you're saying, oh, well, I can give my permission to an AI to go and make a booking and a payment on my behalf. Think about the amount of friendly fraud in travel as it is. That really is a nightmare waiting to happen. And that's what concerns me is you've got to have the base level in order first. And I just don't think we have it as an industry in place at the moment, either on the payments or the travel space. So, yeah, it's coming. Yeah, everyone's testing it and doing bits and pieces, but
choppy waters ahead.
You don't want to be the first, do you?
Yeah, and I don't know what it ultimately looks like from a risk perspective and who will actually support it. And that's my fear with it.
How do you then today communicate your data and the insights to the acquirers in a way that you think will help influence their decision on your business?
So from an underwriting perspective, we're quite lucky insofar as, and I say lucky, but we've worked incredibly hard. And even when we onboard a new acquirer, it's about them understanding and having visibility over our onboarding and risk analysis so that they can see how we have calculated that risk. Also, see whether the customer, the travel company is going to get money before travel or whether they're going to be insured and rely on that. Rely on the insurance for money before travel or whether, the money is sat in a trust account. They constantly audit us and we welcome that. It's not quite open book, but it is. We want them to understand what's going on because we want to build this relationship.
Yeah.
It's a bit like we were saying before, once they've got it, then they crave more volume, but you've got to have that balance and that discipline. So I think it comes down to a two-way street. we say, and we've recently got into aviation and what we can do there. We've had very constructive conversations with our acquiring partners to say, what do you actually want to see? What do you need from us? This is our standard level in terms of the data we're collecting. Aviation at the moment, we're only working on a wheels up basis, but what do you want to see? And we'll get it to give you comfort. We believe we're giving you a level of comfort already, but you've also got your own internal tick boxes to meet.
I think acquirers have to embrace stuff that de-risks themselves, and they're not even having to build it themselves, right? Like that's the key benefit. That's your upsell to them. We'll go and build this for you. We've got the team that can go and do it quickly. Just tell us how you want to see it, in what format, and how often we have to send it to you, right?
Yeah, I think I 100% agree. I think the frustration is they've also got their own internal battles between someone like ourselves and their own direct sales team. And direct sales is probably selling at a cheaper price, probably pushing the risk team harder to get it across the board with no reserves, no collateral, whatever it may be. How does that sit with an acquiring bank? Because it's greater risk for less reward, as I perceive it. But I think there's got to be a balance on that. And what we're trying to encourage our partners to do is actually look at this a bit more holistically and say, well, we'll take a bit of risk ourselves, but we'll give a little bit of risk, to repaid, or we'll take some insurance, whatever it may be, so that our book, especially from a travel perspective, is nicely balanced. So we can take the higher risk, higher reward, but also we're offsetting that with the lower risk, lower reward.
And then it's a really good point. I mean, I obviously work in the embedded payment space where we don't really deal with end merchants in my team. And I kind of feel like I'm quite vocal about that being, not from an enterprise point of view. I think enterprise always, there's going to be that one-to-one relationship, certainly with large customers. But, platforms like yours now exist in almost every part of the ecosystem globally, in retail, in travel, in whatever it might be. That kind of one-to-many acquisition that my team would have, and I would have a focus on. We sign a Trust My Group and we get 1,000 customers or 2,000 customers or 10,000 customers, right? But you guys obviously want the big fish as well, right? So there is a little bit of like, how do you look at that from a portfolio point of view? Is it the one-to-many strategy, or do you have a bit of both in there?
A bit of both. And it comes down to risk and opportunity again. We also don't want to be seen as just supporting the big guys. We that might sound a little bit idealistic, but I started out in travel. I started out with a travel company. We can, through the platform, very easily onboard smaller customers, get them live, get them processing, and hopefully they grow. Hopefully they evolve with us.
And they're the ones where quite often the risk versus reward doesn't stack up for an acquirer, right?
Exactly right. They tend to be, albeit they tend to communicate a lot more with us, they do tend to be a much shorter lead-in sales time. The big fish takes quite a lot longer to actually get across the line. When they do, you win big, but when it goes, that can really damage your business. So, like everything, and I don't want to sound self-righteous, but you've got to have that balanced book, and that's how we look at it. And we're trying to support as many people as we can, acknowledging that the merchant of record model isn't right for every business. And we get plenty of applications where we go, no, we'll actually introduce you direct to the acquirer because that is a better fit for you. We're not the cheapest because we build in, all the insurance, all the things that we do. So if you're working in a single market and located in that market, we're probably not adding a lot of value to you. If you're
giving stuff back to the acquirer the same way they're giving you stuff.
But if you're doing a lot of cross-border, if you're higher risk, absolutely we can add value to what you're doing.
Where do you see the biggest risk for acquirers over the next kind of 3 to 5 years?
I think AI is a risk to them because I think there will be a big push and big pressure to get on board with this agentic commerce, to try and make a name for themselves. In that, they don't want to be left behind. There are a lot of big name players that will do that. And I think they haven't got their own house in order, as what I was saying before, to actually then take it to the next level. You've got to be sure in how you're operating to be able to cover that risk. I think Vamp's a really good example of where people have not got their house in order I'd question whether Visa even got the house in order. I mean, that is a case of where I would like to have seen data standards having been set before it all came in, because you can talk to plenty of acquirers and they might say they know what's going on. They haven't got a clue what's within their
We'll
own
eventually roll
portfolios.
something out on time in payments, though, without like, oh, we're delaying that by another 6 months. We're not quite ready. We're going to give you another 9 months to get ready for that change, right?
I won't hold my breath for that day. But yeah, that's the dream, isn't it? That it all seamlessly fits together and works. I've forgotten the original question, if I'm honest.
No, I think it's
Did
like
that
risk to
answer it? Yeah,
acquirers,
yeah.
right? What's going to be the risk to them? I think you absolutely nailed it. And it's difficult in the travel world for acquirers because you don't know what you don't know, right? And we could be talking about AI, agentic commerce, but also what we can't foresee, there could be another issue in the world over the next 3 to 5 years, and all of a sudden travel shuts down.
Is there a payment trend for you guys as well? And maybe I'm going to give you one that I think could be an interesting one for your space. Open banking obviously was seen as in some way as very high risk in travel.
Yep.
But actually, in terms of speed of payment, in terms of cost of payment, if they overarch some of your protections, is open banking something you guys have delved into, or is that an overhype for you as well?
We've looked at it. I mean, look, the interesting scenario is, could we provide some kind of insurance that essentially or puts a similar chargeback protection on the open banking? Because that's why people buy high value products like travel through a credit card, because they get the chargeback protection. And open banking doesn't offer that, which I think is a challenge. The bottom line is that I don't think it's taken off because there is enough value to the providers in it.
Because Ryanair rolled it out, right?
Yeah.
They did a big song and dance, and I'm assuming it was purely a cost point for them knowing Ryanair.
But I don't know what the adoption rate is. I haven't seen those stats. I would suggest that most people still book through card payment, and anyone that listens to this, watches this, can comment and say you're completely wrong. But I would say most of that is still card payment. I'd say the ease of card payment is still much better. I'd say the protection is a big thing in the travel space, especially if you're not booking through a travel agent or where you've got that financial protection. So
is that adoption rate versus conversion rate, right? So there'll be less adoption rate for open banking, but I'd be certain, say, the conversion rate of someone when they do select open banking will probably be better than someone selecting a card payment.
I'm more thinking of your globalization. You guys obviously in various different parts of the world, and there's certain parts of the world you operate in where A2A payments are more prevalent than card.
Absolutely,
so how are you
that's very
handling
true.
that?
So we are looking at that. That's something that we're expanding out now. And a reason why we've added sort of different companies around the world. So I was struggling to think what I was saying there. Exactly for that, because you need to take that account to account. I look at account to account slightly different to open banking in an already sort of card dependent market like the UK. So account to account, if you go Southeast Asia, cards are not the prevalent payment sort of provision there. I'm not sure, and again, this is only anecdotally, I'm not sure they have the same concern about the chargeback protection as we do over here. If you take the US, chargeback protection is the most important thing. The issuers talk it. The other big thing during COVID was the amount of issuers that were actually encouraging chargebacks, and we still see it now on that. And that's a real kind of challenge. So account to account in those regions, I think, is important. Is certainly important to us in terms of growth. Open banking, I'm struggling to see the major adoption and these high ticket inner space like travel. That's why I'm struggling with it.
Yeah,
there's not enough money in it.
Yeah, no, it's interesting. And I think your point around chargebacks being a kind of go-to, I think the one that springs to mind for me was Abel and Cole, the furniture company, when they went into administration a few years ago. They're obviously still on the high street now, but I remember going onto their website because my mum had bought a sofa from them and she had to end up going and collecting it from a warehouse in Manchester. They basically, if it's been shipped and you can get hold of the warehouse company,
that's on you.
Hire the transit van and went and pick this thing up, right? But on the middle of their website, it literally said, "We're in administration. These are our administrators. if you're having issues with your order, we recommend you contact your bank to raise a raise a chargeback. They're pretty much saying that on their website. I was thinking, this is why the travel sector, the furniture sector, right, they get tarnished with that brush of you're high risk, yes, you're high reward as well, but if it does all go wrong, stuff like that's not going to help, like that, you know, relationship with the risk teams at acquirers in the long term.
But that's the other challenge in the travel space. You know, when there's an atoll failure, you go to the atoll website, again, to your point, the first thing that they say is, if you have paid by credit card, contact your card company and begin a Section 75 or a chargeback. And we're going, well, no, hold on, because this travel company, as part of their atoll, should have had to put some financial protection up.
They've got the money.
They've either got the money, or they've got a bond, or they've got insurance, or whatever it may be. Let's make sure that everyone knows where the protection lies and there's that full coverage, and it shouldn't just fall back on the acquirer, because acquirers just go, well, I don't want to deal with this. I don't want to take an atoll holder. And there has to be this better transparency about that risk, but also who's covering that risk, and in the event of the failure, almost like a drop down of where that risk is being borne.
Definitely.
And I think that's crucial as we move forwards.
No, very good. I mean, and again, on the furniture side, we worked for an acquirer a few years ago, and we did have a loss in the furniture sector, and we didn't board a furniture company for about 2 years after that loss. Changed the whole risk profile of the business.
Absolutely, yeah. It's understandable.
Perfect. So, coming to the end of the show, Will, what would you like to bring to the shelf of shame? What gives you the ick in this world of payments?
I'm going big. I'm going chargebacks as a concept right now. Something created in the 1970s, hasn't really changed. And again, travel where there's a lot of friendly fraud, there is a complete imbalance, and it's not fit for purpose.
Okay, I'm going to unpack that one before I put it on the shelf. The reason being, we've obviously just talked about the US, for example, where chargeback is the biggest consumer upsell, right? So I get it's really legacy, and I've had a very well publicized chargeback challenge in the last couple of years with a drop shipping item that I purchased, right? Dealing with, you know, an issue and a scheme on that side of things. So I do agree there's a lot of frustration around chargebacks and the processes, and the reality of, can you actually win that chargeback dispute if you go down that road? How long does it take? But what's going to replace the chargeback if we're getting rid of it?
I think the chargebacks, in terms of what it was originally created for, the consumer protection piece probably holds true. But there needs to be a balance, and there needs to be clearer messaging and a clearer process to how it actually functions. Because, you know, a consumer gets up to 540 days to contest a chargeback for non-delivery, and a merchant gets 14 days to represent. And I just see it as a, you know, I personally take it on sometimes when I'm given some of these, and I'm quite upset by the level of arrogance of some of these card holders, that they would dare contest the fact that they've signed in for a tour. There are photos of them on a tour.
The audacity.
And you kind of go,
all over social media.
You are literally, the best one we ever had was someone had booked a helicopter ride over Sugarloaf Mountain in Brazil. And so, chargeback, here you go, represent, you've signed in for this tour. Oh no, that wasn't me. The merchant has signed, has forged this kind of signature. So the guys that we work with over there literally trawled through Facebook and everything, and lo and behold, there's this guy taking photos in his helicopter over Sugarloaf Mountain, and we won that. But it shouldn't have had to go that far. It shouldn't have had to be that frustrating, where it's basically a con. And, you know, you hear all the stats. It goes from 60 to 85% of friendly fraud in travel. There has to be a clearer way. You can still call it chargeback. The mechanism that still actually operates it, you know, don't recognise this charge. Fair enough. Unsure about this. Fair enough. Didn't get what I paid for. Fair enough. But if it's non-refundable, you should have read the terms.
The biggest issue, the waiting then, in the favour of the customer?
Yes. Yeah. And also, if it's going to be weighted that way, let's call a spade, just say you're never going to win a chargeback in this space. Because I think travel space success rate is something like 25% typically on some of that.
Wow.
That's
I
what we
raised one chargeback in travel. It's where I booked a 5-star hotel, and it was not a 5-star hotel, so it wasn't as advertised.
But then, I agree with that. But then, did you stay in the 4-star? And should there have been some adjustments?
I had to complain about it. Said this is not what I was shown.
Yeah,
like the rooms were
That's fair
different.
enough.
Like that, the pictures were not what we'd had. And it took me months and months.
Took me 9 months on my COVID one with KLM. I mean, yeah, all they had to do was say, this is us countering, I guess.
Yeah.
All they had to do was say, we're in the process of sorting a refund because it was COVID. They're like, well, we've got tens of thousands of these flights to get through, right? So they could probably buy themselves time. But I got my chargeback reversed, and then, I say months later, they finally refunded me. But because they just said, we're working on it, I had to wait months to get my money back and been abandoned by them in South Africa. So it kind of goes both ways, I think. I've probably only one chargeback ever.
Yeah, me too. I think, so when it comes back to shelf for shame, I think the chargeback process needs to be looked at.
So you're going to let it on?
Yeah, I'm for it. I am for it because it's helped me as a consumer.
It's 2025. We can't do something that was created in 1973
we
in
can't,
the form it was.
I
So
agree
the
with
actual
that.
process needs to
We
change.
can't give a consumer 540 days and give a merchant 14 days to
No,
defend.
and I 100% agree that in some way, shape or form, it needs to go on there and it needs to be changed. But again, open banking.
Open banking does sort it, kind of.
If you're not having chargebacks, then the argument that goes well.
that's
But then you don't get the protection.
Yeah.
You've got to take the adoption.
So legacy chargebacks process
Legacy chargeback
goes on the
process.
shelf of shame.
Yeah,
Brilliant.
I'd agree with that.
Perfect. Look, well, thanks so much for joining us today. If people want to find out more about Trust My Group, get in touch with you, where do they go?
So go to the website, trustmy.group. There's links to both businesses within there. I'm all over LinkedIn. I'm quite opinionated. So come and find me there. Come and have a chat. We're always interested to talk to people. Even if we can't help, we don't believe in square pegs, round holes. We want to find the right solution for you. If that's not us, we'll point you to people that we know in the industry that can help you.
Amazing. Thanks a lot for your time, Will.
Thanks, guys. That's great.
Bye-bye.